Welcome back, y'all. So today's topic is crypto. This was the most requested topic from y'all on investing. So in this video, I'm going to talk about what I see as the advantages of cryptocurrency, what I think about it as an investment vehicle, and finally, what are some strategies we can employ to invest in crypto if we decide to do that. So let's get right into it. So first of all, what are some of the advantages of cryptocurrency? Well, first of all, crypto is a decentralized currency. So it's not controlled by any government body. It's controlled by this underlying blockchain technology, which is globally distributed. So I'm not going to get into that blockchain technology. I'm going to assume that you have some cursory understanding of it. But it suffices to say that cryptocurrency is really for everyone because of the fact that it's decentralized. So that's very much a strong advantage. Secondly, cryptocurrency makes it much easier to send money all around the world. Something that's very important for a lot of people is the ability to send money back home to their relatives in the home country that they're from. They might move to another country for work or for some other reason, but they still have a family in their home country that they need to support, so they need to send money back. Cryptocurrency makes that much easier. Before the old standard method was using wire transfers. Now, sending wire transfers, the wire has to go through all these intermediary banks, and it can take a lot of time. There's a lot of scrutiny. There's high transfer fees. It's slow, and believe me, I worked with wire data for maybe 3 or 4 years building AI solutions to process it. And it's just a lot of overhead, basically. So crypto makes that a lot simpler. It's much faster to transfer money to someone in a different country, much lower transaction fees, and just an easier experience overall. So I see that as a big advantage. Third, not all cryptos are built the same, and some have some special advantages. One that I think is particularly interesting is staking rewards, which is kind of analogous to dividends for stocks, where just by holding on to a particular crypto, you can actually earn an annual percentage back of your holding. It might be 5% or 6%. So that's definitely an advantage of holding some cryptos, is you earn this sort of passive income just by holding them in your crypto wallet. So those are some of the advantages that I see right out of the gate. Now, what about crypto as an investment vehicle? Well, I think there's a lot of people who right now would say crypto, it's the wave of the future. You got to invest in it. Like, look at the prices that have just been shooting off into the moon for so long. So we've seen this with Bitcoin, Ethereum, and now the sort of newer entries into the space, or at least the ones that are newly being talked about in the news, like Dogecoin and SafeMoon. We've seen some crazy skyrockets in price over the last 5 years, even over the last year. Now, I want to say a few cautionary things. One is, first of all, we don't want to just go with what everyone is doing, right? And if we've heard about something in the news, often that means that media hype's already been priced into the asset, whether it's stocks, whether it's the crypto, whatever it is. If everyone's heard about it, if it's making CNBC News or whatever the news platform is, chances are it's well known and we have less of a competitive edge. And I'll get into competitive edges in here in just a second. But that's one thing to keep in mind. The second thing to keep in mind when investing in crypto or anything at all is, how are you going to value that asset? You need to have some kind of an investment thesis that says, I think the price of this asset is going to go to this or go up by this percentage based on X, Y, Z reasons, right? You have to have that investment thesis. Now, for many people, that thesis is basically because the sucker is going up, because my friend or my Lyft driver, Uber driver told me it was going up, or a guy I know who trades cryptos told me it was going up, or Elon Musk told me it was going up. I would argue these are not good reasons to buy a particular asset. Instead, it has to be founded on some other, more, in my opinion, more empirical means. Now, whether that's, you looking at just the price fluctuations of the asset over time and making a predictive model based on that, or having some other data, you have to have something tangible to go off versus pure hearsay, in my opinion, right? So that's something that I would argue you keep in mind. Now, what I like about stocks is that they have financial statements. We can track a stock's price movement to things like its revenue and its revenue growth over time, its earnings, its cash flow, its dividend payments, the cost of its expenditures, the cost of marketing. All these things, we can leverage that data to make predictions, forecasts about where we think the price is going to go in the future. There's something tangible that we can kind of sink our teeth into. We can even look at things like, are the insiders of the company buying or selling the stock? Are big names like Warren Buffett and Michael Burry buying or selling or shorting the stock? These things can all be powerful indicators. With crypto, we don't have the luxury of having financial statements. We really just have the price and the volume trajectories over time. So that's something to keep in mind here. Now, there's another thing we can consider, something that, just because I love y'all, I'm going to give you a little insight into what you might be able to use in addition to these price movements over time, and that's social media. Now, we've seen massive changes in the price of these cryptos based on simple tweets from influencers, Elon Musk being probably the prime example, where just recently he tweeted that Tesla is no longer going to accept Bitcoin to purchase Tesla vehicles, and not Tesla stock, but Bitcoin price drastically plummeted as a consequence of that. So, if I was an industrious Bitcoin or cryptocurrency trader at all, I might be looking at how I can leverage this data to make forecasts as to the price fluctuations of various cryptos. Now, I'm not suggesting you buy Dogecoin because Elon told you to buy Dogecoin, or sell Bitcoin because Elon doesn't like Bitcoin anymore. I'm simply saying there might be a way you could leverage those data in an algorithmic way, in a data-driven way, to make your forecasts as to which cryptos to trade. So something to keep in mind. Don't say I never gave you anything. So that's something to keep in mind right there. So that's some strategies, but I want you to keep in mind the necessity for, in my opinion, leveraging data to make your forecast, and more broadly speaking, to have a competitive edge when you're investing. I think all successful investors need some competitive edge. Now, that might mean something like having special knowledge that no one else has. If you're in the medical industry, you work in a hospital, you're a nurse, a doctor, whatever, you are privy to what medical equipment's being used most often and what isn't, and what there's more of a need of. So that might give you an insight into medical device companies, or maybe hospital, real estate investment trusts that you think are a good idea to invest in, where the common person may not have that type of insight. Wall Street people may not even have those insights, and likely don't. So that's one type of a competitive advantage, is having industrial knowledge, specialized knowledge that other people don't have. Another competitive advantage might be having more sophisticated algorithms, or faster computers, or more data than other people, or just data that other people don't have. Like I talked about, that social media data. If you're able to leverage that in a way that no one's ever thought of or isn't able to do, that might also give you a competitive advantage. Another competitive advantage might be literally how long are you holding that asset for? I think a lot of people these days, they want that instant gratification. They don't want to hold an asset for more than a few days, a few weeks, a few months. If you're able to hold something longer than that because that it has an intrinsic value that's beyond its current price and it just hasn't realized that value yet, you have a big advantage over other investors. So just keep in mind and think about when you're going into a particular asset, what is your competitive advantage that allows you to beat out these other people? Anytime we purchase something, it's sort of, I think, and Michael, I think Seth Klarman, a very amazing investor, once said that, whenever we purchase an asset, it's kind of a arrogant action because we're saying we know the price, the value of this asset better than the consensus. The consensus is what everyone else is currently paying for this. We're paying it because we think it's going to go up. So with that in mind, we have to know something that other people don't know. So keep all these things in mind. Now, I want you to take away from this that I'm not saying that you shouldn't buy crypto. I do think it's the wave of the future, but I don't think unanimously all cryptos are going to the moon. Some will inevitably, fall by the wayside, as is always the case with every industry. Warren Buffett, in his most recent shareholder meeting, noted the fact that after seeing Ford's success, many companies tried to get into the automotive space, build these automotives. I think he said in the 50s there was something like 2,000 automaker companies listed, and today of those 2,000, only 3 remain: GM, Ford, and Chrysler. So something to keep in mind there. So you just be very careful in selecting which ones you think are going to continue to grow based on your careful analysis, where you had that competitive advantage. In any event, I hope this video was helpful. If you liked it, throw a like on it, consider subscribing, and I'll see you very, very soon.